yeah, so plan on being here Wednesday, if you can, and I'll put a old review out there if you can't make it. Doesn't matter. Okay, so anyway, we've got adjusting journal entries we're on page 207. If you don't have your book with you, what's wrong with you? But if you don't, maybe you can find the neighbor, they'll let you look at it. I wouldn't go to a meeting without being prepared, at least have a book in this case. So anyway, Martin Towing Company is at the end of the accounting year, December 31st, 2014. The following data must be considered for developing the company's records and documents. Okay, so A says on January 1st, 2014, the company purchased a new hauling van for $28,000 cash, I guess. Depreciation is estimated at $3,500 for the year, and it's not been recorded. All right, fine. Let's do that one. What would they have done when they bought the truck? Was it a truck? No, you got a hauling van. What would they do when they bought the hauling van? Debit what? Credit what? Did they make a down payment or did they pay for it? They just paid for it. Okay. So what would you do? Debit, credit what? Okay, this is January 1st. Didn't stay where I left. So you want to debit what? Van or delivery equipment? Whatever it is. Okay, maybe it's delivery equipment. Or it could be vans. It's okay. That's what the company wants to call it. They can call it whatever they want. It's real flexible. Okay, how much was it? $28,000. All right, good. Credit what? Yeah, it's too simple. You need to know what day it was. It happens to be January 1st. Okay, happens to be. All right. How about if they, I don't know, let's say they signed a note for it instead, what would you do?
You put delivery equipment and notes payable.
Debit delivery equipment, credit notes payable, full amount. What if you made a 10% down payment, what would you do? Debit delivery equipment for $28,000, credit cash for $2,800, 10% of it, and credit notes payable for the difference, right? For the rest. This is easy. You already know how to do this stuff, don't you? Okay, so don't lose what you already know how to do. Okay, they said that you're in December 31st. Okay, what happens with this piece of delivery equipment? What do you do?
Depreciates there.
You're going to depreciate the certain amount. They say $3,500 today. Okay, what happens? You're using it to deliver stuff, right? Where do you deliver stuff? That's how you make what? Revenues, yeah. When you say money, you don't mean really cash, right? It's increasing your wealth. Could be cash, could be accounts receivable, right, guys? Okay, it could be earning unearned revenue. Okay, but anyway, yeah, or they could pay you some other way instead of cash. So what we're doing is we're earning revenues, aren't we, guys? Okay, sure. Okay, so we're using this equipment to generate revenues. So what's the depreciation on it? It reflects using it up, doesn't it? Using up its utility value, not using up its market value. I don't care what its market value is. Not really, because I'm not going to sell it. I'm going to use it. I have, right over there in that parking lot, right, up on, by the golf course, used to be a golf course, up above the grass and stuff there, okay, over 5 feet there. Circularly. Anyway, I've got a Miata that's 15 years old. It has 75,000 miles on it. It had 50 when it was 5 years old. The last 10 years it's been mine. My wife put that on. Maybe I'm 3 years old. I have 50. Anyway, then I put on miles real slow. Anyway, I don't really care what it's worth. Why don't I care what it's worth? I'm never going to sell it. What for? Still Miata. My wife would never let me get another one. Right? I didn't want it in the first place. She looked cute in it. Well, we got it. Not kidding. Then she got tired of it and got a Volvo. Get old or something. But anyway, yeah. So anyway, I don't care how many miles are on it. Why not?
Because you're not going to sell it.
I'm not going to sell it. I'm going to use it. Does UPS care what the market value is of their trucks? Not particularly. They're going to use them up. They do. I'm sort of. They care what the salvage value is going to be at the end, but it's going to be nowhere near how much they paid for it, right? They're going to mostly use it up. Okay. As we use it up, what are we incurring? Depreciation what? Expense, because I am using it to generate revenues. Got it? Okay. So yeah, what do you want to do at December 31st probably then? Debit what? Expense. Named what? Depreciation. Big deal, right? So we got depreciation expense. And you say it's $3,500? They just gave it to you. Later, we're going to calculate it ourselves. Okay? 3,500. Okay? And credit what? Now, I've got delivery equipment. I hear accumulated depreciation, somebody's going to say. Good. Go ahead. We've got delivery equipment with 28,000 in it. And what we're going to do is we're going to keep track in an accumulated depreciation account. What kind of account is that? Not a liability. But I'm going to have credit. It's an asset. But what kind of an asset? So opposite the normal balance. Contra. Contra in Spanish means opposite or opposing or against. Contra. A contra asset has opposite the normal balance. This account is going to reflect how much of the asset I have used up over time. So I lied. There aren't only 5 kinds of accounts. There's really 10. There are contra assets, contra liabilities, contra equities, contra revenues, contra expenses. Okay? But it's no big deal because a contra works exactly the opposite. So if an asset is increased with a debit, how do you think you increase a contra asset? With a credit. How would you reduce it? So I'm going to increase it with a credit. How would you reduce it? With a debit. Yeah, big deal. Okay? So what happens? I have used up 3,500 of this asset. I don't credit equipment because guess what? The equipment's not going away. I still have the equipment. I mean, the delivery van's still there, right? Everybody agree with that? So what we do is we reflect how much we've used up in an accumulated depreciation account. So what do I want to credit? Accumulated depreciation for 3,500. Okay? Everybody got it? It's not a big deal. What's the book value of the asset now? Book value means what are we putting on our financial statement effectively? What's left to use up? 24,500. I would show on my balance sheet delivery equipment 28,000 less accumulated depreciation 3,500 for net book value for that piece of equipment of 24,500. Everybody got it? Okay, I want you to tell me what you think the life of this asset must be, assuming we're using straight line depreciation. All that means, because there's different methods. There's some declining balance ones where we accelerate it, where we depreciate more than straight line would be. We'll do those later. But straight line would just be the same amount every year, right? This is a full year for 3,500, isn't it? So what's the life of this thing? If it's straight line and zero salvage, and what I mean by zero salvage value or residual value is I'm not going to sell it for anything at the end. I'm using it up total. Got the idea? I could have a salvage value if I want. We'll learn how to handle that later too. So what do you think it is?
8 years.
8 years? How'd you get 8 years?
35 times 2 is 7,000. 28 divided by 7 is 4. And multiplied by 2.
Well, wasn't this a whole year though?
Yeah. Plus the extra 7 years.
It's 3,500 and it's 28,000, right? And this was a whole year. So 3,500 into 28,000, right? How much was it? 8. Fast enough to get right. Yeah. Yes. This is a little more straightforward. Okay. You got the right answer. Must have done it right. Got it right. Okay. So yeah. So it looks like 8 years, doesn't it? Okay. No big deal, huh? So what they did was they took 8 years and divided it into 28. So that's it. By the way, what if I only had this asset for half a year? What would you do? You know, if I bought it July 1st instead of January 1st.
You would have just depreciated about half.
I would have just had half a year's depreciation. What would that have been? 3,500 for a whole year, you guys. What would half a year be? 1,750. No big deal, huh? And then you depreciate at 3,500 every year, right? Year after year after year. And then what would you have in the last year? Which should now be in the 9th year, I guess, in that case. What would it be? The last 1,750, because you're going to depreciate until what? Until accumulated depreciation gets up to how much? 28,000. Simple idea, isn't it? No big deal. We'll have a whole chapter where we're dealing with this stuff, right? But that's it. That's it. What will be the book value at the end of the second year? Book value. 21,000. Right? What are we going to do the second year? We're going to debit depreciation expense 3,500, credit accumulated depreciation 3,500. What will be an accumulated depreciation at that time? 7,000. What's the remaining book value into the second year? 21,000. And we could keep going, couldn't we? Okay? And we will later. Okay, good. All right, that's an easy one. This is an easy adjusting. Okay, what's an adjusting journal entry? You adjust the accounts from where they are to where you want it to be. This account was at 0. I wanted it to be at 3,500, so I credited it by 3,500. Depreciation expense was at 0. I wanted it to be 3,500, so what did I do? Debit it for 3,500. That's all an adjusting entry is. Got it? Okay? Easy. Okay, let's try another one. See if it's a little more difficult than that. During 2014, office supplies amounting to 1,000 were purchased for cash and debited in full to supplies. That'd be supplies inventory, I guess. Okay, I guess that's what they mean. At the end of 2013, the count of supplies remaining on hand was 500. The inventory of supplies counted on hand at December 31st, 2014 was 150. Holy cow. What do you do with this? Was the journal entry at the time they bought it? They bought it when? Oh, just during 2014 sometime. They didn't give us a date, various dates. What did they do? They bought supplies for cash. They even told you what they debited. So what do you want to do? Give me the entry that they do during the year. Debit supplies inventory. How much? 1,000. Credit what? Cash. Okay. That's one way they could do it. We're going to do it a different way. That's what they said in the plan. That's what we'll do. Okay? They debit supplies inventory, which is an asset account, right? Okay. So what do you want to do? Let's do the adjusting journal entry. This was during 2014, during the year, right? Adjusting journal entry December 31st. What do you want to do? What do you know?
$500 worth of supplies.
In supplies inventory, what they start with?
500.
Okay. What else do you know? To me, like they used up 350, huh? And that's not everything, though. What else did they do?
They bought 1,000.
Yeah, they bought 1,000. You made the journal entry. So how much was available if you start with 500 and you buy 1,000? 1,500. How much did you use if you only have 150 left? Yeah, even I can do this. 1,350 got used. If I use, why would I use supplies? To generate revenues. Why do I incur any of my costs? Generate revenues. And what do I call all my costs? Expenses. What would be a really name for supplies I used up? Supplies expense. Big deal. What do you think? Now, what's in supplies expense relating to this particular supplies? Nothing, I guess, right? What do you want it to be? How much did you use up? 1,350. How are you going to make it 1,350 if it's nothing now? Debit it for 1,350, of course. All that's happened is you used up supplies, right? You take it out of supplies inventory because you no longer have the asset, and you put it in supplies expense because you used it up in an attempt to generate revenues. Notice I always say attempt. You don't always get the revenues. How about you run an ad campaign and nobody buys anything? You still have the expense. You tried, right? Okay. What if they hire you and you do absolutely nothing? It's still salary expense, right? Didn't generate any revenues. Not a good strategy for you. Or for the company, for that matter, yes. But what do they hope to do when they hire you? They pay him $50,000 for his career. They hope he generates a lot more revenue than what? 50,000. Yeah. Well, your benefits and everything, it really costs them 70. So, yeah, it's got to be more. Okay, a lot more. All right. By the way, what my rule of thumb always was, I tried to generate 3 times the revenue of what I cost. CPA from those. Make the partners like me. 3 times. Maybe 50 grand, I'll make 150 for you. You keep 100, I take 50. Do they like me? Yeah, they don't want you to leave, they give you more. Raise your billing rate. So you can generate more. Thank you, sure, of course. People are greedy. No, it's just business. Let's write the journal entries. You need anybody to write the journal entry now that we did that? Yes, ma'am.
Supply expense, why would you increase it with the
Good. Good. All right. Didn't ask that. Yeah. It's kind of nice to have it written down right in front of you until it's just automatic. everything seems backwards for a while, doesn't it? Am I right?
Yeah.
It's like, oh, geez, no, it's got to be debit. I think what it is you want it to be plus and minus instead of left and right. Or you want it to be good and bad instead of left and right. What does debit mean? Left. What does credit mean? Right. You know, are debits sometimes good? Yeah, sometimes bad. Same with credits. Are debits sometimes plus, sometimes minus? Same with credits. Yeah. You got to break yourself for that. That's probably what happens. You know what will happen to you if you think they're good and bad is you'll try to debit two things. You can't get your debits equal with credits. Or you try to credit two things. Can't get your debits equal with credits. Right? Anytime that happens to you, back off. Think about what the model is. Okay? So, can you write the journal entry now, you guys? What do you think? How about debit supplies expense? How much? Yeah. Okay, sure. What do you want to credit? You see why I like you to call it inventory? So you tell what it is instead of just writing down supplies? Okay? Let's change the problem. Different problem. Okay? Let's say what they said was, instead of debiting supplies inventory, which is an asset account, also a real account or a permanent account. It's real or permanent, you read about that, right? It's real or permanent because we don't close it. What do we mean by close accounts? We close the revenue expense accounts to what? Make them zero, and where does the balance in them go? Retained earnings, because that's where we close net income to, right? Net income would increase retained earnings, or if it's a net loss, would reduce it, right? So we'll do a closing entry later, but they're really easy. Okay, it's not a big deal. Okay, so the revenue expense accounts, we call them revenue expense accounts, income statement accounts, or we also call them nominal or temporary accounts. Why do you think they're nominal or temporary? Because they are a subset of equity, right? They're nominal. They're temporary. We close them every year. Got the idea? So what if I said, instead of going to an asset account, because I go on a quiz, I could say they debited an asset account. I'd never say they debited a particular account. So know that, right? If I said they debited an asset account, of course, it'd be supplies inventory. What if I said they debited a real or a permanent account? Same account, right? It'd be supplies inventory. What if I say they debited an income statement account or a nominal or temporary account? What would it be? When they buy the inventory, what account would you debit? It's supplies, you guys, that you're buying. You are going to use them someday. What are they going to become when you use them? Not when you use them. They're an asset until you use them. What are they going to become when you use them? An expense. Yeah, right? Everybody with me on this? Do I make your head hurt by the end of the hour every time we come in here? God, I hope so. I'm really trying. I'm doing my best. Right? That would be good, because then that means your brain's kind of growing. You know, you're thinking, figuring things out. Right? I don't care how much I get through in here. I care how much you think when I get here. I could work all the problems in the homework every day we come in here and then go home and be fine. And you're good. Right? You gotta think. You gotta think. If you know how to do one of these, you know how to do all of them. I'm not kidding. That's how you want to do it. So what you do is you work through one of them, you know? You really think, and you really work it out, and you figure it out, and then the next one you just fly. And then you stop. And if you don't fly on the second one, what should you do? Keep thinking and do another one, right? Until it's just, oh, that's obvious, that's obvious, that's obvious. Okay? And this is obvious, you guys. I just said they went to an income statement account or a nominal or a temporary account. What account do you think it is? It's supplies. Instead of debiting supplies inventory, what would they debit? Someday I'm going to use it up and it's going to become a supplies expense. How many of us were thinking that? You didn't say anything? Only a couple? Say something. Okay, no, you don't have to say anything. It's okay. I want everybody to think about it. Credit what? If they paid for it, what would it be? Cash. So would that have been okay if they recorded it that way? Of course, it'd be just fine. We don't care. I don't care what the balance is in the accounts unless I do what? Prepare a balance sheet and income statement. That's what I have to have them right. I don't care what they are otherwise, right? I know it's inventory when I bought it, but I'm going to use most of it anyway, so I put it all into expense, huh? It's all right. What do I do at the end of the year? Adjust the expense from where it is to where it needs to be, and adjust the inventory from where it is to where it needs to be. Oh, so let's say they did that. What would be your adjusting journal entry at December 31st. All of a sudden, this class is getting harder, isn't it? And imagine what I can do to you to make sure you really know what you're doing here. And also to torture you, because that's fun. Okay, what do you think? That's fun. Not really. It's really what I do, I guess. What's the balance in each of these accounts, then, if we recorded it this way? Anybody know? What's the balance of supplies inventory when we started the year? Was not 1,000.
Zero.
Was not 0.
500.
It was 500. You guys told me that already. Wasn't it? Yeah. And it was 500, it was 500. What do you think the balance should be at the end? They wouldn't counter it. How much should it be? What should they put on their balance sheet? How about how much they have? Which is how much? 150. It's now 500. I wish it was 150, don't you? Okay. Supplies expense. It started at nothing, but what did you do to supplies expense when you bought the supplies? You increased it by 1,000. It might have been a number of different purchases, but in total 1,000, huh? What's the balance in supplies expense? 1,000. What's the balance in supplies inventory? 500. What do you wish the balance was in supplies inventory? 150. How would you make an adjustment to that? What would you do? I think I'd credit it for 350, wouldn't you? So supplies inventory is going to go down by 150. This is really cool, you guys. What am I going to have to debit if I used them up? 5, 6. Whoops, 150. No, it's 350. The other one, yeah. But you notice I screwed up and just let me do it. So mean. Okay, that's it, isn't it? So how much is in supplies expense now? Huh. Those numbers sound a little familiar to you guys? Well, yeah, it's the same company. They just accounted for it differently. What happened? They bought 1,000, right? They started with 500, bought 1,000, used up 1,350. Expense should be 1,350. Balance sheet should show 150 at the end. Common sense, isn't it? You guys, there's the rules, right? What you memorize. Debit means left, put the assets on the left. Everything else is common sense. Then what do? You use those rules, I guess, right? You use this little model and common sense. What happened? You get what you give up. Where you at? Right? And record it. Okay? Over and over and over. So that was easy, huh? Not bad? So could I give it to you either way? Sure. And I will. Okay? Well, let's try another one. On December 31st, they completed repairs on one of the company's trucks at a cost of $2,600. It's not recorded yet. Will be paid later. What should they do at December 31st? There's no transaction that's already been done, right? This is just going to be an adjusted journal entry into the period. What's this going to be? I had them do the repairs. Why did I have them do the repairs? So my truck keeps running? My van keeps running? Why do I want my van to keep running? So I keep delivering stuff. So I keep generating what? Revenue. So what's the repairs to me? Expense. Okay? Repair and maintenance expense. You like that? Why am I debiting it? Why am I debiting it?
You're increasing the expense.
You're increasing expenses, yeah. How much was it?
2,600.
When do I want to record the expense? When I incurred it, right? When they did the work for me and used it up, right? As soon as you repair it, start using it again, right? Okay. What do you want to credit? If I paid them, credit cash. If I had paid them in advance, what would I be crediting them? Prepaid. Because I would have had a debit to prepaid and credit cash when I paid them in advance, right? That would have been a deferral of expense. Okay? What's this going to be? Ah, I owe them. It's going to be an accrual of expense, isn't it? Credit what? Not cash. I'm not paying them. Accounts payable, maybe. You could call it repair and maintenance payable, but most companies would just be accounts payable with this one. Okay? But they can do whatever they want. They can have a repair and maintenance payable if they feel like it. Right? Fine. Everybody good? That was easy, wasn't it? Done. Okay? Good. All right, so that's an accrual. All right, let's try another one. You took my spot on the table. Folks falling on the floor. It's throwing me off. We had a poor guy making a presentation to business school faculty yesterday, and he's really a good marketing type, very smooth and all that, and they lost power. In Oregon, the construction end, they lost power for a while yesterday, right during free period, when we were having a meeting. This poor guy has a really slick PowerPoint presentation, so he's got his laptop computer holding it up in front of 20 people, moving back and forth. It's really hilarious. So, yeah, you get all right. It's fine. What he was presenting was a bunch of garbage, but still, he did fine. He's trying to sell us some stuff. Can you tell I don't want to buy the stuff he's selling? Okay. That's my vote. So anyway, what do you do? December 31st, property taxes on land for 2014 were estimated at $1,800. The tax has not been recorded. Oh, this is too easy. Will be paid in 2015 when billed. What are you going to do with this one? Why do we have to pay property taxes? Because we own the property, right? Requirement. Taxes are a requirement, right? Obviously. Are they a cost of doing business, to getting your revenues? Yeah. So what are you going to call them? Tax expense. Now land, and I'm buying land here. That's when I bought the land, right? It's not land. You're going to be land expense. No, property tax expense. Right? Okay, we probably call it property tax expense. How do I increase expenses all? This problem's not as good as the last one. This is not fun. Because they're going to pay it later, aren't they? Right? Know what it says? So what are you going to do? This is the adjusting journal entry, December 31st. Well, probably property tax payable in this case, just by what people do. That's kind of hard. How do I know whether it's an account payable or property tax payable? You just have to understand business, how people do stuff, right? You just have to get a feel for that. Right? It is an account payable, but it's payable to the government, so we probably wouldn't call it accounts payable. Accounts payable is what we owe our vendors, people who provide us with goods and services. So the repair and maintenance would be one of our vendors, whoever does the repairs for us. Make sense? So probably accounts payable. If it's the government, it'd probably be taxes payable or something like that. Yeah.
If we were to put accounts payable, would we
I'd mark it.
be wrong?
Yeah, sure. Just for fun. Yeah.
Oh.
So pay attention when you're looking at things as folks, right? So don't memorize them. Think about why it's what it is. Does that make sense? Okay. Like prepaid rent, you can't call it rent. I paid in advance, so I'm going to use it up later. Okay. Don't do that. Just please call it prepaid rent.
Okay.
Okay. You can call it prepaid rent expense if you want, though. I don't care. I'll still tell what it is. Okay, so there's flexibility, but not over the edge.
Would be as descriptive as you can.
Yeah, be as descriptive as you can without making it long.
Okay.
That's always a trick. By the way, what if you just write down expense? It's wrong. I don't know what it is. What if you just write down rent? It's wrong. You know what? Let's do rent. This is fun. This is fun. Let's do this. Okay. By the way, we're done with that one, right? Just another approval. Let's do this though. What does the word rent mean? That has something to do with rent stuff. How many accounts would use the word rent? Rent expense. What is that? That's where I rented a building or equipment and I used it up, right? Used up the time period that I rented for. Okay, keep going. Rent revenue. That's where I rented something to somebody, right? So I got an expense account and I've got a revenue account, done. What else? Rent what? Rent payable. That's where I had rent expense and I'm going to pay it later, right? Rent receivable. What's that? That's where they owe me, right? I earned rent revenue and haven't paid me yet. So far I have an expense, a revenue, a liability, and an asset. What does rent mean? I don't know. Something to do with rent. What does expense mean? I don't know. It's some kind of an expense. Give me 2 words and you usually got it, right? Usually. Okay? All right. Are there more? You guys, these are the accruals. You gave me both the accruals. Everybody always gives me accruals. They don't ever give me the deferrals. I don't know why. Because deferrals aren't quite as, I don't know. We never get paid in advance. We do pay for things in advance, though. But anyway, yeah, what's the deal on this? What would it be? Oh, prepaid. Excellent. Prepaid rent, right? Go on the other side. But prepaid rent. Everybody agree with that? And what's the other one? What if I have not earned the revenue yet? They pay me, but I haven't earned it yet. What's it called? Unearned rent revenue. Right? Look at that. 1, 2, 3, 4, 5, 6 different accounts with rent in it. Got it? That'll really help. Change it to insurance. Change it to utilities. Change it to salaries. Getting the idea? Right? Give me this. That worked out good. Good question. Did you do that for the other class? Oh, well, those poor guys. They'll never know it then, probably. I hope that's a joke. Anyway. All right. Let's see. Well, what is the next one? We'll do E. It's all right. What's E? These are too easy. F's going to be a good one. What's E? Company completed towing service for an out-of-state company for $4,000 payable by the customer within 30 days. We have not collected anything. It's now December 31st. We're going to need to make an adjusting journal entry. By the way, all these adjusting journal entries are to get the right number on your balance sheet and the right number on your income statement, right? In asset, liability, equity, revenue, expense, whatever it is. You're just adjusting from where we are to where we want to be. That's it. Good? Okay, what do you want this one to be? I did this stuff for him. So by virtue of doing it, I have what? Service revenue. And what kind of work are we doing here? Towing. Towing service revenue? Towing revenue? Either one. You want to debit or credit it?
Credit.
Credit, why? Because it's revenue. Revenue, well, equity's on the right, and revenues are a subset of equity, and therefore increasing equity is a credit. Right? Okay, how much is that? $4,000. So towing revenue, towing service revenue. Okay, if they paid me, what would I do? I'd debit what? Cash. If they had paid me in advance earlier, what would I have? Well, they'd have a prepaid. What would I have? Unearned rent revenue, which would be a liability, and now I'd be satisfying the liability by doing the work, right? And I would debit what? Unearned towing revenue. It's okay, we'll do it on the insurance one in a minute. Okay? Yeah. That's if we had deferred it, right? If they paid me in advance. Here, though, they're going to pay me later. So what do I have? An asset named? Yeah, accounts receivable. Yeah, this is from a customer's on open account. So the accounts receivable, which is more of an asset. Right, guys? We already did these, didn't we? There's nothing new here. Just thinking about it now and figuring out how much the amount is. Okay? Right? Look at me like you're mad at me today. No. You just hate me. Not mad. Hates me today. Okay, all right, that's fine. All right. You can smile at the sunshine. This is what you want to do with your time. There you go. That got a smile. Yeah. I think that's a joke. Okay, anyway, all right, so F, on July 1st, 2014, 3 insurance premium in the amount of $900 was paid. They even say they debited prepaid insurance. I will not do that. I'll tell you what. They either debited a real account or a nominal account. You like it? Or a permanent account or a temporary account. Or maybe I'll be nice and say a balance sheet account or an income statement account, right? You don't know what those are, aren't you? Let's do it both ways. Let's do this one both ways, too. This is a good one. 3-year insurance. What date was it?
July 1st.
July 1st. What's their year end? December 31st. So let's do it 2 different ways. Let's do this first one. What kind of account did they go to, by the way? Prepaid insurance? What kind of account is that? Balance sheet, permanent, real, right? So what they did was they debited prepaid insurance. Everybody agree with that? Yeah. And they credited what? Let's hope it's cash. Prepaid, it's got to be cash. Okay, how much was it? $900? Boy, this is not very much insurance. Okay, anyway, $900 for 3 years. Okay, $300 a year. How small an asset is that for insuring? Okay, but anyway. All right, so how much of that will they use up every year? $300. It's 3 years. Everybody agree? You got to know it's 3 years. You got to know it's July 1st. What's the year end? December 31st. So here's where we're at. Prepaid insurance has how much in it? Related to this policy. Starts with nothing. How much do we put in? 900. Insurance expense, what does it start with, seeing as it's a temporary account that we close? It always starts with 0, right, when you start the year? Revenue expense accounts all start with 0 because you close them, don't you? You read about that. Hope you're reading, okay, and paying attention. Working some problems, okay, figuring this stuff out. Insurance expense is 0 right now. Okay, well, what do you think prepaid should be now? And what do you think insurance expense should be now? And be careful. How much got used up is how much should be insurance expense, right? Insurance is one of the costs that we incur to generate our revenues, true? If you don't have insurance, you're not going to be in business long, probably. Okay? Right? You can self-insure if you're big enough, right? Okay.
So another year, haven't they used 300 then?
You think they used 300 this year?
Probably used
It's the right idea, but I disagree with the amount.
150.
150. Yeah, why is it only 150? Because it's only half a year. It'd be 300 for a full year, right? But only half a year went by. Everybody got it? So you have to be careful. That's why we need to keep track of those dates, right? How many months went by? 6, right? 6 months out of 3 years. So how much did we use up? 150. 300 would have been a year. So what account do you want to be 150? Yeah, the amount we used up would be insurance expense. What do you want prepaid to be? I bought 900 and I used up 150 of it. How much have I not used up? 750. This is so easy. Okay, what do you want to debit insurance expense for it? If it's 0 and you want it to be 150. How about 150, right? Don't sit and swim on this stuff. Figure it out. It's going to be, the quiz is going to be real easy for you or just virtually impossible. Get in there fast. Okay? If you know how to do it, it's easy. Joke. If you don't know what you're doing, it's a miserable hour. Or whatever, 40 minutes, whatever. Sit there. Credit what? Prepaid insurance? Yeah. Everybody got it? What will you do next year? Another year goes by. Have a what?
Whole year or half?
It's a whole year. I guess we're assuming we're only doing annual financial statements. In real life, you probably do monthly. You take 1/36 of it every month. You'll have an insurance expense, credit, prepaid, wouldn't you? Right? But if we're only doing annual, the end of next year, what will we do? Insurance expense for how much? 300. Credit prepaid for how much? 300. What will be left of prepaid? 450. What's that? Next year and a half. And we'll do it again at the end of the next year, right? What will be left in there? 150. That'll be for the last 6 months. Everybody got it? And then the following year we'll use that up. And of course we buy into the insurance policy. This is simple, isn't it? Okay? All right. Let's say instead of going to this asset account, asset, real, permanent, whatever, prepaid insurance, let's say instead we go to a expense account, which is going to be what? What expense account is insurance going to end up in? Insurance expense, of course, right? So if it's a nominal or a temporary or an expense account, what would you debit on July 1st? Insurance expense. Now, a lot of times students will tell me, that's just wrong because they haven't used it up yet. It's not wrong. It doesn't matter. What would be wrong is going to land with it or something, or contributing capital where it's lost. You have to go find it. It's going to be insurance anyway. At some point, is this prepaid insurance going to be used up and it'll be insurance expense? Yes. Is it okay to put it in insurance expense if you want to? Sure. What do you have to do at the end of the year to get your balance sheet and income statement right? You've got to get $750 prepaid and $150 insurance expense to be right at the end of the year done. Okay, so if we put it all into insurance expense, wouldn't that be debit insurance expense for $900? And it'd be credit what? Cash? For $900. Of course, the cash is still the same. Everybody with me on this? Okay, so where am I at December 31st at the end of the first year? What do I have in prepaid insurance? Nothing. Relating to this policy at least, right? What do I have in insurance expense? What'd you put in there? 900. How much time went by? Half a year. So what do you want expense to be? Not 900. What should it be? The amount you used up. Only 150. Am I right, you guys? Isn't that what you wanted December 31st? What do you want prepaid insurance to be? The amount you didn't use up. How much is it? 750. Can anybody get from 0 to 750 in prepaid insurance here? What do? Debit prepaid insurance. Credit what? Insurance expense, because I didn't use it up. Get it out of the expense account. Do I care which method the company's bookkeeper uses to record insurance? Not in the least. What if they have two different bookkeepers, and one was trained to do it this way, and the other one was trained to do it this way because they used to work for different companies, and now they work at the same place, and they constantly fight over which way to record it. So one of your bookkeepers records it this way every time, and the other one records it this way every time. What would you tell them if you're the CPA working on the account? You're both right. Fine. Go ahead. Then what would you do at the end of the year? Figure out how much should be prepaid insurance and how much should be insurance expense and make a journal entry. Everything's fixable, guys. It's not even wrong. Who cares what the numbers are unless I do a what? Balance sheet income statement. But again, I don't want them to go land with it because that'll be a pain to find it, right? They have to get it out of land if they put it in land. Right, guys? Or rent expense or something. Got the idea? So I'd like one of those two accounts for the yard. Everybody good? Okay. Try something else. We got a few more minutes now. Don't actually put stuff away. Oh yeah, let's do one where there's there's a debt. That's good. G. On October 1st, 2014, the company borrowed $13,000 from a local bank. 1 year, 12% note payable. So is that 12% for a month, for a year, quarter of a year? It's a whole year. You know, if you look at interest rates and they don't tell you what the term is, I don't mean the term of the loan. The loan could be a 1 month loan. If they say 12% interest, what do they mean? They don't mean 12% per month. That's illegal. 12 times 12, loan sharks do that. 144% interest, right? Yeah. For that, right? So we're not going to do that. Okay, so what do we mean when we say 12%? 12% per year. Unless they say what? 1% per month. If they say per month or per quarter, then that's what it is. So if it was a 6-month note, what would you think? That would be 12% per year, not for 6 months. Make sense? Everybody good on that? Okay, yeah. Okay, so anyway, they borrowed money. What would the journal entry be when they borrowed the money? They have an asset named?
Cash.
Cash, probably. How much?
13,000.
What was the date of this thing anyway?
October 1st.
How many months to the end of the year? Careful. So count October. October, November, December, right? It's 3 months. But it was October 31st. Then there's only 2, right? November and December. That screws people up all the time. The first of the month is a different day than the last of the month. Yeah, we all know that, but read carefully, right? Okay, so count carefully. September 30th and October 1st are the same, right? Count. Oh, we always assume there are 30 days in a month. We know there's not. And in real life, we do count the number of days, right? It makes a difference in the interest. But we assume 30-day months to sort of calculate. So. Question? Okay. All right. Credit what? Sign a note, did we?
Notes payable.
Notes payable. Why are we crediting it? It's a liability. Why'd you debit cash? It's an asset. The more the asset, the more the liability. Yeah. Okay, so you need an entry at December 31st. What happens? How much time went by? We said it was 3 months, didn't we? So what happens every day that goes by? I borrowed the money, used the money to buy some asset probably, and I'm using the asset to generate revenue. So the cost of the money is interest, which is then an expense, a cost I incurred to get my revenues, right? Sure. It's good, not insurance. Interest expense. Yeah. So you're going to have interest expense every day? We won't record it every day. What for? We don't do financial statements every day. If I'm doing monthly financial statements, I record it every month. Got it. Okay? I'm not going to pay it, though, until the note's due, right? So what am I going to have? If I have more expense, what do you want to do? Debit or credit? It's expense. Debit it. Yeah. We're increasing it. If I was paying it, I'd credit cash, but I'm not going to credit cash because I'm not going to pay it, so I'm not going to credit. I'm accruing this, aren't I? So what's it going to be? Cleverly, interest what? I owe it payable. You're accruing a liability, aren't you? This is an accrual. How much interest? It's $13,000 for 3 months at 12%. So you can take $13,000 times 12%, divide it by 12 and take it times 3 twelfths in other words, or you just take 3% times it. It was 12%, of course. But if it was 7.5% or something, this is a good way to do it, right? Take 7.5% times the 13 divided by 12 times 3. Okay, so anyway, what's 3% times 13,000? 390. What's 390? It's the expense for the 3 months. So I want to get that on my income statement, don't I? Because I incurred that expense. Doesn't matter whether I paid it, right, guys? I'm going to pay it later. So I'm accruing this one. Wouldn't you debit interest expense for 390? Of course. What would you credit interest payable for? 390, because that's what you owe. Okay, well, this is too easy. This is the kind of stuff I'd like to do, yeah? Give me the journal entry when it's due. Was it 1 year? So September 30th, I guess it's due of the next year. It's the first year A, second year B. All right. Pay off the loan. Write a journal. So you pay it with. How much are you going to pay? What are you getting rid of? What do you need to record? Is this fun? Say yes. Why not? Might as well be. When you work, you can have a good time, or you can be miserable. How many of your life's years are going to be at work? Miserable or happy? What do you choose? If you go to work and you're miserable, do something else. Move. Right? Don't do that with this class, okay? This thing. Start it. Don't change majors. Okay. So I never really liked that. That's great. You won't be successful if things don't happen. So never do anything for the money. Let the money follow the work. If you want to do it. You're having fun. Sort of. Not as much fun as drinking a bourbon and so forth. You guys can be drinking bourbons. Get old sick doing nothing. Contemplation. Okay, what do we got? What do they pay it with? Cash. What do you want to do to cash? How about credit? Okay, what are they paying off? The note payable is going away. How would you reduce the liability with the debit? What else are they paying off? Oh, they're going to have interest expense. Excellent. What else are they paying off? That's this year's interest expense. What about last year's for A's? Paying off your interest payable, you guys? Uh-oh. You didn't screw that up. So how much was the interest payable we're paying off? It's still there, right? So we pay it. So there's $13,390. Well, how much are you going to pay, you guys? It's 13,000 times what for a whole year? 12%, right? 12/12 of it, a whole year. So what's 12% times 13,000? 1,560. 10% is 13,000 plus 130 plus 1. Yeah, okay. Yeah. All right. Or 2% twice, 260 plus 2. Yeah. 1,560, is it? Okay. Everybody agree? So how much are we going to pay him? 13,000 plus 1,560? 14,560, is that right? Well, how much is interest for this year? That was a whole year. How many months go by this year? 9/12. So what's 9/12 to 1,560? Or you can take 3 times 390 and get it. How much is that? $1,170. So it's 390 from last year and 1170 for this year, right? Interest expense 1,170. Is that journal entry balance? You bet. Got it? So that's kind of stuff I like to put on tests. Can you carry it one step further, right?
Couldn't we just do the 9 over, couldn't we just multiply the 9 over 12?
9% times 13,000?
No, the 0.75 or 9 over 12.
Oh, absolutely. Yeah, times the 1,560, absolutely. Or you just take 9% of the 13,000 for the next year, too. This is simple interest, not compound. We'll do compound later. Okay, guys? See you later. Work, work, work. And be thinking while you're doing the work. Don't just go through the motions.